Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Sensex and the Nifty hit a record high once again. The Sensex now within touching distance of 68,000. The Nifty gains nearly 100 points. Both indices are up 2% this week. CNBC-TV18 analysis shows appointment of a new CEO can serve as a substantial catalyst for stock revaluation. 73 Indian companies that had a change of guard since 2022 have given returns of a minimum of 50%. Stocks like IRFC and Adani Power tripled, while Suzlon and RBL Bank gained up to 200% after new CEOs took charge.
AI is going to solve the issues that mankind couldn't solve in the past.
A day after SoftBank's chip design company ARM made a strong debut on Wall Street, MasayoshiSon says artificial intelligence can surpass human intelligence. That's a CNBC exclusive. SEBI's deadline seeking public comment on its proposed clampdown on unregistered financial influencers ends today. Financial influencers tell CNBC-TV18 that all shouldn't be painted with the same brush. Add that SEBI must differentiate between those creating educational content and those pushing trading tips. Fintech industry body announces a new code of conduct for digital lenders. New norms include seeking customer info on existing debt obligations and giving clear options to them to give or withdraw consent on the use of their data. The code is mandatory for all 44 of its leading members. Auto workers in Detroit go on mass strike. Around 13,000 workers at General Motors, Ford and Stellantis walk out of their factories after failing to reach a deal on better wages and job security with automakers. Death toll from the floods in Libya crosses 11,000 even as rescuers search for over 10,000 missing people. Authorities in Derna start to bury the dead in mass graves outside of the city. The International Red Cross Committee distributes body bags for a dignified treatment to the dead. Congress MLA Maman Khan arrested in connection with the violence in Haryana's New in July. Mobile internet and bulk SMS services suspended in Haryana's New till tomorrow. The government says the decision taken after the police expressed apprehension that there would be tension, agitation and damage of public and private property. Well, as always, let's start with the market action of the day. Another record. So on Friday, the bulls entering deep into uncharted waters. The Sensex gained over 300 points and is now within touching distance of 68,000. The Nifty gaining nearly 90 points, ending the day just at about 20,192. For the week, both major indices have gained about 2% each. Mid-caps have seen a roller coaster ride. The index ending the day with gains, but for the week, the mid-cap index saw marginal losses, but today higher by about 113 points. Now, since the start of 2022, a total of 73 companies in India have had a change of guard. Nearly 25% of listed companies have reported returns of 50% or more since getting a new top executive. So it seems like a new CEO taking over is a trigger for stock movement. Nimesh joins us now to take us through the numbers. Nimesh, what's the data telling you?
Well, indeed, Shireen, a change of guard or a new CEO indeed leads to a lot of re-rating in the stocks, and that's showing up in the data as well. So let me just run through the data. There are two companies, which have seen a return of more than 200% since the new CEO joining since 2022. There are 6 companies where the returns have been between 100 to 200%. 10 companies where the return has been more than 50 to 100%, and there are only 12 companies which have given negative returns as well. So there are some companies which have given negative returns. Now, just look at the big winners first. So the big winners in that list includes names like IRFC. Since the new CEO joining in October 2022, that stock has rallied 260%. Adani Power since January 22, that has rallied almost 240%. Suzlon in the last 6 months since the new CEO joining in April 23, that stock has rallied almost 200%. The likes of RBL, that's up almost 160%. Also, the likes of, say, Zensar Technologies and BSE, both have got new CEOs in January 2023 this year, and both the stocks have rallied nearly 150%. And something like Aditya Birla Capital, where there was a new CEO in July 2022, that stock has also rallied more than 100%. But as I said, that's a big trigger for a lot of stocks to outperform. There are some underperformers as well in that list. And the big surprise name is Jubilant Foodworks. That company got a new CEO in September 2022, but still the stock is down 11% since the CEO coming in. Quest Corp, that's been a big underperformer. That stock is down 35% since the new CEO joining in Feb 2022. And something like a Granules, even that stock is down 4%. And even there, the new CEO joined in 2022. So, but now look at the list, and this is an interesting list. These are the names where the CEOs have recently joined in the very recent past. So look at Shoppers Stop. The new CEO came in September 23. That stock is still underperforming or pretty much flat. SBI Cards got a new CEO in August 23. That stock is still down. Hindustan Lever, that's a big name to track. They got a new CEO in June 2023. That stock still is down 5%. Even Y2D, the stock is underperformed. So a new CEO joining is a big trigger for a lot of stocks to outperform. But now the focus will be on the new CEOs who are going to join in. There are some new names as well. For instance, United Breweries, they've got a new CEO. So these are the big triggers to track. And one of the important triggers is a new CEO joining leads to a big re-rating.
Well, either on the upside or on the downside. Of course, that is the data and the story that it's telling us. Nimish, many thanks for joining us. Well, on the commodity action, crude oil prices hitting a 10-month high after China slashed mandatory cash reserve requirements for its banks. Concerns over supply squeeze also weighed on investors. Brent crude now hovering around the $94 per barrel mark. SoftBank-backed ARM climbed 25% on its Nasdaq debut, selling about 95.5 million shares. This is the biggest IPO of the year. The chip design company's market cap stood at $68 billion at closing. This is higher than the value of NVIDIA. Hormuz is standing by with more on ARM's financials. Blockbuster IPO there, Hormuz.
Absolutely, and as we mentioned the last time also, people were certainly giving an arm and a leg to get those shares, and it indeed lived up to that expectation. It was the biggest IPO of the year, the biggest in 2 years. In fact, it was the biggest listing of the year, and ARM began trading at a 10% premium to its IPO price of $51, but it ended with gains of 25%, and that closing gave it a market cap of $68 billion. Now, at $68 billion, the stock was valued at 110 times price to earnings based on current year profits. Now that is even more expensive than NVIDIA, which is valued at 108 times. Now remember, NVIDIA shares have already gone up 220% this year, and a caveat here is that this valuation of NVIDIA does not include its current quarter guidance, where it said that it expects revenues to grow by 170% year on year. Now, ARM's IPO also resulted in a windfall for SoftBank. It took ARM private in 2016 for $32 billion. It sold 10% stake in the IPO, raised close to $5 billion. But the remaining 90% that they have, that went up by $12 billion in value on the first day of trading. Now, MasayoshiSon was on CNBC last evening. He mentioned that he would want to keep that remaining 90% stake for as long as possible. Now, we highlighted earlier that ARM's customers, Apple, Samsung, NVIDIA, TSMC, all of them got together and bought shares worth $735 million of ARM. But the IPO now has raised a lot of questions, and those questions come in the form of concerns. And one of the biggest concern is the high valuation, as we highlighted earlier. And the second one stems from that high valuation, because whether it can be justified or not. Now, as of the current quarter, ARM's revenue fell 2.5%, while its net profit had halved from the last year. The third concern comes from China, and that is a big one because 20 to 25% of ARM's business, which is almost a quarter, comes from China. And such a revenue concentration for any business is problematic, let alone ARM. And the last one, it got hidden in the prospectus pages, but nobody picked that up, and that is RISC-V, or which is also known as Reduced Instruction Set Computing, which is an open source chip architecture. And ARM has said that if that gains prominence, it will impact their business, and their prospectus says, and I quote, if RISC-V related technology continues to be developed and market support for it increases, our customers may choose to utilize this free open source architecture instead of our products. But for now, the stock is in the honeymoon phase. The euphoria is yet to die down. I'll end with the fact that 2/3 of Nasdaq's IPOs have underperformed the market within 3 years of listing. We'll see where ARM goes, but let's now go across to ARM CEO Rene Haas, who told CNBC that artificial intelligence presents a big opportunity for the company.
Nearly 13,000 US auto workers have stopped production and gone on strike. Now, this after negotiations with the big three automakers over higher wages broke down. All three factories owned by General Motors, Ford and Stellantis are currently not operating. President Biden held talks with executives and labor union leaders to break the deadlock, but that has not been successful yet. Back home, the government is considering formulating a new licensing policy to boost drug safety. Reports indicate that the Health Ministry has proposed to bring in uniformity across India with the focus on safety. The focus on these changes is to boost drug safety after cough syrups made in the country were allegedly linked to the deaths of children overseas across several jurisdictions. Now, shares of the Burger King franchisee restaurant brand Asia soaring after 25% equity changed hands in a block deal. Sources tell CNBC-TV18 that Everstone, the company's promoter, is the likely seller. Everstone owned 40.8% equity in the company as of the end of June. It has been a slow opening for online travel booking portal Yatra Online's IPO. Only 10% of the overall book has been subscribed so far. The company plans to raise 775 crore rupees through this public issue and is eyeing a Dalal Street listing on the 29th of September. In the aviation space, SpiceJet has completed a payment of $1.5 million to Credit Suisse in a regulatory filing. The cash-strapped airline said it has executed the transaction on the 14th of September, and this comes days after the Supreme Court directed the low-cost carrier to make the payment to Credit Suisse in a matter related to unpaid dues. The big story that we are tracking, the deadline for public comments on SEBI's consultation paper on financial influencers ends today. The market regulator has proposed restrictions on unregistered financial influencers to put them on par with registered entities. So what is the rationale behind the SEBI clampdown? Also, how is the financial influencer community reacting to this? Surabhi is standing by now with more on this. Surabhi, this has thrown open a massive debate, more so online, because that is where we find financial influencers or finfluencers. What's the reaction? What are they seeking? What do they hope for?
Shireen, hi. Well, yes, I've been tapping into a lot of these, debates that have been ongoing, whether it's online or offline. And we've been speaking to the Finfluencer community ourselves right here at CNBC-TV18. So I'll just quickly present both sides of the argument. What SEBI is saying. Essentially, SEBI was batting in that consultation paper, batting for a complete disassociation, a total disconnect between unregistered finfluencers and regulated entities such as mutual funds or stockbrokers. SEBI made it very clear. No commissions, no referral fee, no exchange of any sort unless a finfluencer registered. Now, this is still a proposal. Why did SEBI say this? SEBI says that influencers manage to gain in several ways. I'll just outline some of them. Referral fee for usage of the product, platform or service. Non-cash benefits like allowing the finfluencer free usage of that platform or that product or that service. Compensation from several social media activities, and other forms of profit sharing with various platforms. So this was SEBI's argument that we need to break down this business model and not allow this unless these entities choose to register with us. Now, what is the finfluencer side of the argument? The first thing that finfluencers are saying is that don't treat all of us with the same brush. I can tell you this, the community itself is fairly divided. There are voices clamoring to treat the finfluencers who are making educational content or investor awareness content very, very differently from those who are, say, offering trading tips or advice or these master classes on futures and options, etc. So that's the first ask, saying that don't paint everybody with the same brush. The second thing is that registration needs to be made simpler. Finfluencers say that the current guidelines, for instance, the RIA, the Registered Investment Advisor guidelines, are very, very onerous. There are audits required. You need to keep digital trails, if not paper trails. And it's simply not feasible because RIAs themselves have been surrendering a lot of their licenses. So they're saying simpler onboarding and registration. And finally, the one point on which there seems to be some consensus is disclosure. A lot of influencers we've spoken to say that if there is a financial or a commercial relationship between a mutual fund or a stockbroker and a finfluencer, then that needs to be disclosed. And regulation should say that explicitly. Let's see. Of course, we are waiting to hear what SEBI would have to say, the final paper on this matter.
I think a proper distinction needs to be made between what do we mean by enticing people to trade and what do we mean by educating their followers. Is enticing people is a problem. तो ये बीमारी है, इसको ठीक करना चाहिए. तो प्रॉब्लम ये हो रहा है, अभी लोग बोल रहे हैं कि बीमारी है क्या, इंसान को ही खत्म कर दो तो बीमारी ऑटोमेटिकली खत्म हो जाएगी. That should not be the thought process. We should address as to what is the problem and that should be taken care of, is what my thought process is.
Should they be registered? Yes, they should be registered. Now, at this moment, in the discussion paper, there are 2-3 avenues. I always believe that the discussion will continue and things will evolve. Now, registration at the beginning of the discussion was, should it be easy? Try becoming a distributor for selling soaps or anything from a large FMCG company. Is it easy? No, it's not. And we are talking about selling fiduciary responsibilities here. As the money starts growing bigger and bigger, these processes will become tougher as we go.
What SEBI is bringing in is making sure that, as Swaroop said, lot of disclosures, lot of clarity to the users. Right? If you look at the spirit of the law is that we want to protect the value of the consumers, right? Protect the consumers. They should have all the disclosures. They should have all the clarity of what the user is saying, what the influencer is saying.
Well, that is a thoughtful but a fiery debate. Do tune into CNBC-TV18 this evening. We bring you all points of view on the Finfluencer debate that's coming up. Coming up right after this break, Tata Steel is all set to get a £500 million subsidy from the UK government for its Port Talbot facility. More on that when we return. Well, the big story that we're breaking at this moment, Tata Steel's Port Talbot plant is set to get $500 million in subsidy from the British government. London Bureau Chief Sanjay Suri joins us now with more. Sanjay, many thanks for joining us. This has been long awaited, long pending, finally a breakthrough.
And also, Shireen, long needed, because the production facilities at the Tata centers in Port Talbot particularly are quite outdated. They are very carbon intensive. We are talking of a dramatic and a generational shift from blast furnaces to electric arc furnaces, which of course are much greener. And Tata has been seeking to do this for a while, not just to modernize, but to make the production more economical, more feasible, more sustainable. And this is a change that Tata needs money for. It needs money to fund the capital and the technology. It also needs the capital to pay employees. A lot of them will be made redundant. By some estimates of about 8,000 Tata workers in Britain, about 3,000 will be made redundant as a result of these changes. Port Talbot itself employs about 4,000, and a lot of layoffs are likely there if the changes were to come through. And these workers will have to be paid for redundancy or early retirement. So Tata needs the money, and it has been in talks with the government, and there are indications that the money will now come.
Absolutely, that seems to be the case. And as Sanjay was pointing out, this has been much needed, long awaited, and finally a breakthrough there. Sanjay Suri, appreciate you joining us here on CNBC-TV18. That is the big breaking story at this hour. With that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news continues right after this.